So anyways, good morning. June 21st, that's a Thursday. What do we tend to do on Thursdays? Well, very often, and well, once a month certainly, is ECB Day. ECB. Now here's the great thing about the Europeans. Psst, let me tell you about Europe, huh? They're not going to do anything. But it's really important that we watch it today. But they may hint that they're thinking about doing something someday, later. I mean, just the absolute kings of kicking the can down the road, right? So, no policy change is about to be announced in the next 6.5 minutes. That's at 7:45 a.m. New York time. And then 45 minutes after that, 8:30 New York time, we start the press conference. And that's where Draghi would say, yeah, we're thinking about buying more corporate bonds. We're thinking about maybe a little bit more negative interest rates, so on and so forth. And then, here's what I'm hoping next year. Well, how about this? If we just called this kind of stuff, let's just oversimplify everything and just call it quantitative easing, where they're buying bonds, increasing money supply and all that kind of stuff, right? What are they expecting to happen by doing this? What is their intention behind this policy? Inflation. Another way of describing that is increase asset prices. And an oversimplified version of that is the stock market rallies. Okay? So, wouldn't it be interesting, since the ECB is running out of bonds to buy, they added to the mix that they're actually buying corporate bonds, but even that's becoming a problem. So what if next year they just simply buy equities? Like Japan, I think the Bank of Japan now owns like 20% of the Nikkei, something like that, or 20 or 30% of the entire Japanese stock market is owned by the Bank of Japan. So the ECB could go that way. Wouldn't it be neat? Yeah. So anyways, let's play the happy music and let's get ready for the non-announcement, but maybe we get some trade opportunities out of it. Where's my mouse? All right, so let's get going. So let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne, the Chief FX Market Strategist for TradersWay.com. We do these strategy sessions because I'm trying to earn your loyalty on behalf of the firm. I provide education and training and share my personal experiences as a trader over all these years and decades. And then maybe one day when you are confident in your trading skills, you will choose a broker to trade your real money and be your trading partner for your successful Forex trading business. And you'll choose TradersWay as your prime brokerage firm. You'll pull the trigger, we'll enter the trades quickly and at reasonable prices, and everybody will be happy. Life is good, life is beautiful, right? Hey, we do these sessions every single day, 7:30 in the morning, Monday through Thursday here at Forex.Today, and every Friday at FX Street. For premium members, netfxstreet.com. I am also Forex Speaker of the Year, of the year, of the year, of the year. Okay, we are now 2.5 minutes away from the big news. Wouldn't it be great, though, if they actually did something? But, see, it's summer, right? Have you ever been to Europe in the summer? Even Europeans have never even been to Europe in the summer. Yeah, I remember in particular one summer in Zurich, the entire town, and I'm not joking, ghost town. Ghost town. All right, about 90 seconds. An absolute ghost town. They're like entire buildings at 10 o'clock in the morning, all the lights are off. Entire buildings. Right? It's like a zombie apocalypse in Zurich in late July.
The euro currently a little change, fractionally higher at 110.15. Euro pound trading at 83.56. Euro firmer against the British pound currency by about 0.5%. 10-year Bund has been positive for the session, up about 2.5 basis points. Currently trading at 0.01%. First time we've seen the 10-year Bund in positive territory in over a week. Just under a minute for the rate decision. Again, it tends to be a few moments delayed. We'll lead off with the main refi financing rate, whether it's unchanged or cut into negative territory. We're in the window for the ECB rate decision. Unchanged across the board there for ECB. No surprises, and the QE, no mentions there.
Thank you, TradeTheNews.com, for sharing the non-news news.
ECB maintaining $80 billion, 80 billion euros per month in its QE, so no changes there in the QE.
No real change in the Euro USD, no real change in the Euro Yen, no real change in the German stock market. Although it's turning a little tiny bit red, I wouldn't call it the end of the world. So that leaves 8:30 a.m.
Statement known that they'll continue
if that's as low as the Turkish lira has ever been, maybe there's an opportunity somewhere, right? I'm on weekly candles, guys. This is going back to 2011. Pretty amazing, huh? This is all the way back to 2009. How interesting, huh? And maybe that's just too much. But TradersWay also has, where is it? It's Euro Lira. Oh, here it is. Maybe that offers a better opportunity for you. Potential carry trade. Interest rates in the Eurozone are quite low, like negative, right? What's the interest rate in Turkey? 10? So it'd be interesting if it rolled over, wouldn't it? Yeah, Gorilla. Yeah, you should. Hopefully, you had the audio. Hopefully, you already heard all that. Did you guys hear the audio? Yeah. Okay. Okay. Good. Good. Thank you, TradeTheNews.com. But wouldn't it be fun, just for fun? Let's say you were not trying to make any money at all on this lira, but you said, "I want to buy some lira at the bottom of the garbage can here," and jam the stop. And what if you never, ever, 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 ever got out? Yes, Dan, it is. So I don't know. Just for fun, I thought you might appreciate that it's at an all-time low, or in this case, USD Turkish lira. It's an all-time high. But maybe that's a turning point. But with a coup d'état, you'd think things couldn't get any worse. Coups are not necessarily good for the economy or for investor confidence, right? But yeah, that's what I'm saying, Greg. Greg, right, points out that if you sell this sucker, you're going to get paid like 10% or something, right? 10% annually, leveraged. Oh, is it? Yeah. So it's even better than that, eh, Greg? So there you go. Is that against euro or for against dollar? I suppose euro, right? We get the extra spread and all that. So, anyways, just fun, right? Just fun and games. Good stuff, cool beans. Probably not gonna, you know, probably not gonna. You don't want to kind of put it on your permanent record, but maybe just for fun, you got it. Just make sure you use a stop, right? German stock market hasn't really done anything on the announcement yet. Higher high, lower low, stuck in the middle. What's the general idea for this? Back away. Hourly chart would indicate probably up, but remember we're facing a fundamental event, right? Not a technical entry per se. Well, Greg, in that case, that would be a hedge, and you would close it before the end of the day anyways, and therefore the swap would be zero. So, anyways, that's the situation for the no doubt diggity dax and no doubt. So look at this USD yen way down, Aussie yen way down, Kiwi yen way down. Boo hoo. So Kuroda came out, he was being interviewed, and he said no helicopter money, which just simply is no change in policy, and there were many that were hoping that there would be a policy change. And then I also was long some yen pairs last night. So that's really unfortunate for news events like that to come out, because that's the guy that would do it, and he says there's no possibility. And the reason there was hope for a more aggressive policy like a helicopter money type thing is, Ben Bernanke was out there last month flapping his gums about that, but everybody just sat there and said, "Are you stupid? What kind of book are you selling me, boy?" So, anyways, so they're not doing anything at the Bank of Japan like that. I would expect further quantitative easing and stuff like that. So the yen gets strong. Now, do you remember maybe 2 or 3 days ago, or maybe it was even last week? I emphasized with furious, right, vengeance, right, with great vengeance and furious anger, that even though the yen pairs were up significantly over the last week or two, that I was fully emotionally prepared for all those yen pairs to come all the way back down. Anybody remember that? Daniel says yes. Anybody else? Peter, Ron, Joseph? Yeah. And I said, I'm not predicting that it will, but it seems like it almost always does, and that you can set yourself up in July for great frustration, and you don't need to be. You don't need to set yourself up like that. So if it starts coming around and falling, just be prepared for it, and don't get upset. It's just the nature of the beast. Just relax. Just let it go. Right? Just let it go, and just pick your lines for the next one. Right? Okay, Aussie yen monthly central pivot. How does that make you feel? Okay. I was long this pair last night. Son of a bitch. So, and so here's the big question. Do you buy it here or you buy it down there? And you don't know. I mean, honestly, you don't know. And I hate situations where you're long and strong and it comes down. So you've protected yourself from downside. So you exit and then it just comes down a little bit and then goes back up. Could happen. Hopefully not, right? What I'm really hoping for is, to pick it up down here. And if you look at that and then you look at the cluster down here, that would be cool. Okay, on Aussie, that'd be great. Kiwi's already there though, right? So where's my Kiwi dough? Here's my Kiwi. All right, so looking at Kiwi, it's very, very similar. I got to go out to the hourly, let's say. That's not far enough. How about 4 hour? Okay, and there it is, just like I showed you on Aussie. We're there now, eh? Pivot cluster down here, which also looks good. So we're looking at 73, 73.50. Or maybe you just buy it here at 74 and pray. Buy it at 74, buy it at 73, buy it at 72, buy it at 71. Maybe. Are you looking at weekly or monthly, Artem? No. I don't know. Maybe I misspoke. Maybe it was a different pivot. If so, I apologize. Okay, so anyways, there we are in all of that. And then, of course, the real frustration is if you find yourself here, right, or even lower. And I have been in that situation where you buy it off of, the ultimate low for the third or fourth time. I mean, I think it was a year or two ago. I must have bought at support like 17 times over the course of 9 months, and it just kept coming back. Right? I felt like the guy building Castle Swamp or Swamp Castle. You know what I'm talking about? They said I was daft to build a castle in the swamp, but I built it anyways. And it fell into the swamp. So I built a second castle. It too fell into the swamp. The third burned down, fell over, and sank in the swamp. But the fourth, right? The fourth held. And son, one day all of this will be yours. What? The curtains? You guys know what I'm talking about? Huge tracts of land. Nobody knows. Not for you. Kind of horribly sheltered life have you lived? Yes, it is a Monty Python skit. Yes. I want to marry her. What do you mean you don't want to marry her? What's wrong with her? I don't like her. Don't like her? Oh no, look at that. So anyways, what I was saying is, even though I bought it 17 times in a row, sometimes what it'll do is it'll even dip down a little farther, maybe not that far, but let's say it comes down here, and you're like, oh, God, dang it. Or let's say not even 70, it goes down to 69 and a half. And you're like, oh my gosh, I can't believe it. It's down there. And then, of course. So, again, what I tell people this time of year is just, if you have to, say it out loud or write it down, but give yourself permission to make the trades anyways, and then be comfortable with the fact that you might break even 17 times in a row. If that's what happens, that's what happens. And maybe you can still make short-term day trades kind of thing, and you can still pick up pennies, penny pinching type pips, 25 pips here, 25 pips there. That's fine. Don't worry about it. But you still got to take the investment grade trades, not just income, right? And so you buy, you jam, stop, so on and so forth, and you say to yourself, I probably won't make any money. But if you can catch it, then you're golden, right? Gregor says, from August 11th. Yeah, well, that's why I already have this marked here, right? I just said like 4 minutes ago you could buy it at 74. We're right in the cluster. 73.50 probably would be better. But, these things don't always happen, The thing is, I'm telling you that you need to be ready. You need to have it all thought out in advance. You need to pull the trigger where you're supposed to. You're supposed to manage the trade properly on the risk side. That means have a stop close. And then when you can, reduce your risk or remove your risk. But also be mentally prepared to have it go up and then have it come down, and you're okay with that. Because you say, well, your job here is to build your portfolio of longer term positions, and it takes a while. to get some of the traction to stick and just not be upset. Just not be upset and just say, well, that's just that part of that strategy. But on the long run, that's what's going to make you your big dollars. Right? Because as we all know, a 6-ounce swallow cannot carry a 1-pound coconut. It's a mere matter of weight ratios. Okay, so there's that one. I have an Aussie in there. Maybe it's just an M3. What did I say? I called it a central. Yeah, sorry. There's a cluster in there. What is it? Monthly M3, weekly central? Yeah. That's probably it. So I was reading about credit default swaps, and their prices for Turkish bonds have gone up. So like what you would do normally is you'd buy, let's say you buy a Turkish bond because it pays a lot of money, but there's a lot of risk associated with it. So you buy insurance to say, well, if Turkey defaults, then my insurance will cover my losses, and you're hedged. And so let me move this over here. Reading on Bloomberg. The white area here is the price of credit default swaps for Turkish bonds. And down in June, we were down here around 220. And also, pachow, way up here at 300. Okay. Which is, more, or let's say about the same as Brazil, more than South Africa, and more than Russia. Another way of saying it is, if you need that kind of insurance, it's probably quite risky, right? Or that if you were in a Turkish bond, suddenly you're going to need more insurance, right? So that's why the price goes up, because suddenly everyone is trying to buy Turkish credit default swaps. And so that's usually bad. Okay? This kind of thing, usually bad. It's amazing South African credit default swaps are at, almost, what is that, 250 basis points? Like, wow. And then how about this? Brazil in, let's say, June was at 360 basis points. Wow. Russia, in its worst, seems like it was more like 250. Okay? I thought it actually went closer to 500, actually, just off of memory, but don't, right? Don't quote me, son. I ain't saying nothing. So, anyways, Turkish credit default swap prices have gone up since the coup d'état, since the coup de ville. Hey, Kenny, don't worry. The fun's about to start in about 20 and a half minutes. So poor Kuroda messed it up for us. Yeah, actually early. I can tell you, our friend Jimbo was short some euro pairs last night. And I think James hit his targets. Okay, so why am I showing you these things, guys? Is there a point? That's where James must feel good, right? He sees double tops on the end pairs, great. So he shorts them as he's supposed to, and then all of a sudden, boom! They all just drop like a ton of bricks. And you're like, I'm the greatest trader in the whole world. Turns out, luck luck is good too, right? Luck is good too. Thank you, Kuroda. So anyways, the point here, guys, is I'm trying to get you to look at these and develop plans. If this comes down to that cluster of weekly, monthly, central, are you going to do something? Right? Hello? And then the beast. Boom, 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 boom. Here comes the drums, right? Yeah. What are you going to do with the beast here? Mm-hmm. 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 Okay. Clearly, that's what's going on. What's going on? Nothing's right, I'm torn. All right. And isn't that nice how you see our bottom here is just perfectly shouldered on the left? No, it's not head and shoulders, but you're a little late. I'm already torn. There's the highest high. There's the most recent low. There's the more recent high. Boop. Okay, I guess we should look at some dollar pairs. There's our friend the kitty cat. Okay. So the question is, are you going to play it as no longer making higher highs? Oh my gosh, is that a bearish bat? OMG. It's a bloody bearish bot. Okay. Or you're just simply selling it off the top because it's resistance. Oops, where's my horizontal line? Come on. There we go. Right. Right, see how they just happen to also be pivot? So one could just simply have it sort of like down, up, which we've had, right? And then down. That's one way to play it. And if you trade with bats, that can come down. What do the moving averages tell you? That it's still bullish on this time frame, but it is slowing down significantly. Right? So one way to play it is play it like a range. So you mark the bottom of the range, which I have here. And then what would you call the top? Up here or down here? I'd probably have it on the lower side. Okay. And that's all. And then the next thing to do is wait for a breakout if you're not going to play the range. Yeah, well, you know Wednesdays are the days to trade CAD and oil, so, right? Singapore dollar. Well, let's change this up. Let's make this West Texas over here. And what do you want to do? USD CAD? I guess that's probably the pure play. Bup, 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 beep, bum, 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 bum. Okay. So the theory is if this comes down, right, what would happen to the kitty cat? You're a little late. I'm already too. Okay, Stefan, we'll take a look. All right, so that's one way you can do this, guys, is you watch oil on one side and you trade USD CAD on the other. And they should be inversely correlated, right? They don't have to be, but that's what one would assume. So they're both 4-hour charts. Let's see, one zip's probably too much. So like this big drop here is this big rise here. After the big drop, it rallied back. After the big rise, it fell back. Okay. Came back to the bottom, went back to the top, came back down, and back up. Yeah. So if this continues, if oil continues its move downward, which I'll remind you has been our trade plan for about 2 months, I guess. Oh, it's not on this chart, it's on the other chart. But anyways, our plan was this would go up to 50-ish and drop. Then it did drop below 50, came back to 50, which is the next sell zone off of the lower lower low, lower high hammock move, drop, retrace, drop, retrace, drop. So anyways, I think we have it going down to, like, based on old data, 41. Right now, based on the current data, 43 seems like it's the aggressive target. So 43, right? So if this continues to drop, we're at 46 right now. If it continues to fall and march down toward 43, now weekly pivots say it's not going to go to 43. It's only going to go to 44 and a half this week. So maybe next week we go to 43. And if that's the case, there's a propensity for the USD CAD to want to march upward, probably close to this area here at 133 or 134. What do you stink? Smell like a plan? Well, Paul, if there are such things as commodity currencies, wouldn't they be somewhat influenced by the underlying commodity itself? No, it's not a dumb question, but I'm restating it so that it hits you, right? So if there are things called commodity currencies, then commodities would impact them. So if I said oil, what currency do you think of? If I say gold, what currency do you think of? That's right, Aussie. If I say milk, what commodity do you think of? Yeah. If I say copper, uh-oh. Chile. Chi, le. Hey, did you buy any of those El Salvadorian bonds? Huh? Did you lend El Salvador any money? There was a good deal there. Okay. Oh, I know one thing I want to talk about today. Did you see the price on live cattle? Let's see if I can get that. Live cattle futures. Chi. Le. Let's see. Let's go CME. Let's see if you got anything for moi. Hey, da boo boo. And howdy do to you. All right, let's go. Will it give us more than that? Let's do weekly. Ho, 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 ho. That's 1 year of trading. Huh. Seems like prices have come down, huh? You going to buy some filet mignon today? Yeah. Dammoth just says it's down 26.6% year to date. Wow. Year over year. All right. See? I didn't know that. But I think if you go out farther, I think we're on like a 5-year low. We can't get any farther data on this contract. But I think you get what I'm talking about, right? It's way down. So what does that say for inflation in the United States? If the price of steak is at a 5-year low. Johnny's got a few friends worried. And then, John, are they worried about feed prices? No, they're low too. Are they using corn or soy? Grass. What the hell's wrong with your friends, dude? Seriously? Grass fed? Who wants that? Gee whiz. Yeah, corn. I don't feed my animals corn. Over the years, I've noticed like they get skin problems and all kinds of things, right? And then you change their diet from having corn in there, and all of a sudden they're healthy again. Like, what? Wow, corn is just bad. All right, so we're getting pretty close to ECB. So you can go to Forex.Today and watch it live. Did anybody give me a like yet for posting this? For thinking about you this morning? To say, I need to take care of my friends? Okay, one person. All right, thank you. 27 people have looked at it, but only 2 people, right? Given it a like. What is that? 94% of people don't share the love. How sad. Okay. All right, 5 out of 29. Woo! Yeah, the the percentages are skyrocketing on here. All right, so anyways, this when you get to 8:30, you can click the play button. Should be all good in the hood. In fact, we can try it now. So very nice, very nice. So we got that coming, so we can watch that in the background. I'm already told. You're a little late. I've already short. By the way, I've been really impressed with some of your posts lately, guys. Very, very good work. Very, very good work. Keep that up. Oh, you know what I wanted to do? I'm running out of time quickly here, but US, let's get it off oil. USD yen looked pretty nice off that 15-minute 21. The problem is if you're a bear, it's looking good, and if you're a bull, it's looking good on just different time frames. But it seems to me if you're gonna like fib this, you got that set up pretty nice, or maybe you fib it this way, right? But either way, seemed like a pretty reasonable place to sell that. That's a 5-minute chart. Go to a 15-minute, and it's your 21, right? So once again, you don't have to be a rocket surgeon to figure some of these setups out. So you just simply have had to have looked at it in advance, right? So that's got my eye, but of course now, if you do it now, it's a little late because, anything could happen. Draghi could say anything like, yeah, we're going to start buying stocks and the yen will weaken. Why would the yen weaken? if Draghi said, yeah, we're going to buy equities now, not just bonds. Yeah, because people are going to front run that knowledge to say, wow, if the ECB is going to enter the stock market, they're going to drive prices up, so I should probably get in now so that when ECB drives prices up, it'll make me money. And then you're going to leverage the thing on the ends, and so we'll have a free money rally. So write this down. Anytime a central bank says they're going to pump free money into the market, things like stocks are going to go up. And it sounds funny, doesn't it? Like, really, free money? But we've seen central banks around the world do this over the last 7 or 8 years on multiple occasions, where they just say, free money. Who would like free money? And guess what? People line up. They line up. They're like, yeah, free money sounds good. I would like some free money. Helicopter money is a little different. It has to do with perpetual bonds and all that kind of stuff.
Ladies and gentlemen, the Vice President and I are pleased, very pleased, to welcome you to our press conference. We'll now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at present or lower levels for an extended period of time and well past the horizon of our net asset purchases. Regarding non-standard monetary policy measures, we confirm that the monthly asset purchases of 80 billion euros are intended to run until the end of March 2017 or beyond if necessary, and in any case until the Governing Council sees a sustained adjustment in the path of inflation consistent with its inflation aim. Today, we focus developments since our last monetary policy meeting in early June.
Philly Fed came out really good, guys.
Following the UK referendum on EU membership, our assessment is that euro area financial markets have weathered the spike in uncertainty and volatility with encouraging resilience. The announced readiness of central banks to provide liquidity if needed, and our accommodative monetary policy measures, as well as a robust regulatory and supervisory framework, have all helped to keep market stress contained. Financing conditions remain highly supportive, which contributes to a strengthening in credit creation. They continue to support our baseline scenario of an ongoing economic recovery and...
Oh, you're right. Sorry, I looked at it backwards. Sorry.
At the same time, given prevailing uncertainties, the Governing Council will continue to monitor economic and financial market developments very closely and to safeguard the pass-through of its accommodative monetary policy to the real economy. Over the coming months, when we
Euro USD is moving on the Philly Fed news, not on the Draghi news.
we will be in a better position to reassess the underlying macroeconomic conditions, the most likely paths of inflation and growth, and the distribution of risks around those paths. If warranted to achieve its objective, the Governing Council will act by using all the instruments available within its mandate. Let me now explain our assessment in greater
Let me
detail,
explain for you.
starting with the economic analysis.
Lucy, let me explain you something.
Increased by 0.6% quarter-on-quarter in the first quarter of 2016, after 0.4% in the last quarter of 2015. Growth continues to be supported by domestic demand,
Draghi.
while export growth has remained modest. Incoming data point to ongoing growth in the second quarter of 2016, though at a lower rate than in the first quarter. Looking ahead, we continue to expect the economic recovery to proceed at a moderate pace. Domestic demand remains supported by the pass-through of our monetary policy measures to the real economy. Favorable financing conditions and improvements in corporate profitability continue to promote a recovery in investment. Sustained employment gains, which are also benefiting from past structural reforms, and still relatively low oil prices, provide additional support for households' real disposable income and thus for private consumption. In addition, the fiscal stance in the euro area is expected to be mildly expansionary in 2016 and to turn broadly neutral in 2017 and 2018.
Euro dollar, Oscar Mike. It came back, what, 618?
At the same time, headwinds to the economic recovery in the euro area include the outcome of the UK referendum.
Yeah, it could be.
Other
That's why they invented stops.
Subdued growth prospects in emerging markets, the necessary balance sheet adjustments in a number of sectors, and a sluggish pace of implementation of structural reforms. Against this background, the risks to the euro area growth outlook remain tilted to the downside. According to Eurostat, euro area annual HICP inflation in June 2016 was 0.1%, up from minus 0.1% in May, mainly reflecting higher energy and services price inflation. Looking ahead, on the basis of current futures prices for oil, inflation rates are likely to remain
50%,
very low
50,
in the
50,
next few
50.
months before starting to pick up later in 2016, in large part owing to base effects in the annual rate of change of energy prices. Supported by our monetary policy measures and the expected economic recovery, inflation rates should increase further in 2017 and 2018. Turning to the monetary analysis, broad money, M3, continued to increase at robust pace in May 2016, with its annual rate of growth standing at 4.9% after 4.6% in April. As in previous months, annual growth in M3 was mainly supported by its most liquid components, with a narrow monetary aggregate M1 expanding at an annual rate of 9.1% in May after 9.7% in April. Loan dynamics followed the path of gradual recovery observed since the beginning of 2014. The annual rate of change of loans to non-financial corporations increased to 1.4% in May 2016.
Are you guys taking notes?
1.2% in April. Developments in loans to enterprises continue to reflect the lack of relationship with the business cycle, credit risk, and the ongoing adjustment of financial and non-financial sector balance sheets. The annual growth rate of loans to households remained broadly stable at 1.6% in May after 1.5% in April. The euro Bank Lending Survey for the second quarter of 2016 indicates further improvements in loan supply conditions for loans to enterprises and households, and a continued increase in loan demand across all loan categories. Furthermore, banks continued to report that the targeted longer-term refinancing operations had contributed to a more favorable terms and conditions on loans. The monetary policy measures in place since June 2014
Watch that euro.
have significantly improved borrowing conditions for firms and households, as well as credit flows across the euro area. The comprehensive package of new monetary policy measures adopted in March this year underpins the ongoing upturn in loan growth, thereby supporting the recovery of the real economy. In the light of the prevailing uncertainties, it is essential that the bank lending channel continues to function well. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed the need to preserve an appropriate degree of monetary accommodation in order to secure a return of inflation rates towards levels that are below but close to 2% without undue delay. Monetary policy is focused on maintaining price stability over the medium term, and its accommodative stance supports economic activity. As emphasized repeatedly by the Governing Council, and as again strongly echoed in both European and international policy discussions, in order to reap the full benefits from our monetary policy measures, other policy areas must contribute much more decisively, both at the national and the European level. The implementation of structural reforms needs to be substantially stepped up to reduce structural unemployment and boost potential of growth.
Okay, we're hitting our target already. 50% predicts 1382. Oh, and you're welcome.
Specific reform needs differ across individual economies. Focus should be on actions to raise productivity and improve the business environment, including the provision of an adequate public infrastructure, which are vital to increase investment and boost job creation. The enhancement of current investment initiatives, including the extension of the Juncker Plan, progress on the Capital Markets Union, and reforms that will improve the resolution of non-performing loans will also contribute positively to this objective. In an environment of accommodative monetary policy, the swift and effective implementation of structural reforms in line with the 2016 country-specific recommendations recently approved by
Euro dollar
the
moving
Council
best.
will not only lead to higher sustainable economic growth in the euro area, but will also make the euro area more resilient to global shocks. Fiscal policy
Look how the
also support
look how euro dollar hit the extension and stopped. Remember, 50% predicts a 1382. If you're in like 50% to 618, the target's 1382.
confidence in the fiscal framework. At the same time, all countries should strive for a more growth-friendly composition of fiscal policies.
Don't forget, at the top of the hour, we have the South African interest rate decision. All right, Q&A.
It's Financial Times. Brexit has revived concerns that you will run out of bonds to buy for the quantitative easing program.
The brunette looks like she's from the Matrix, right?
Today, whether to relax the rule, or was there any discussion of whether to relax the rules?
Yeah, exactly, Gorilla. She's actually, I think it's Bloomberg. Yeah, she's like in the UK office of Bloomberg, but yeah. A little bit distracting.
We discussed basically the general economic conditions. We concluded that we didn't have yet information to take decisions, and we decided.
Julia Chatterley. Is it CNBC? All right. But it's CNBC Europe, though, right?
Assess the underlying economic conditions, and no attention was really given to discuss specific instruments at this point in time. IMF in its recent update of the World Economic Outlook singled out Italian and Portuguese banks as one of the risks for the outlook. Is that the view that you share? Is one of the risks that you're taking into account in your considerations? And do you think that some degree of public support for banks in the Eurozone is acceptable or desirable? Well, what I just said in the introductory statement, monetary policy is certainly supportive of economic activity and is focused on maintaining price stability. But also other policy measures are needed in order to reap the full benefits of our monetary policy. And one of them is to address the non-performing loans, more generally non-performing exposures in the euro area. And so that is a very important reform. And we still consider it, I would say we consider it a risk, but still it has to be addressed. But it's a complex problem. We may actually come back on it later on. What's the other question? Well, we have in place the rules. We have in place rules of state aid. We have the BRRD, and as I said several times, these rules contain all the flexibility to cope with exceptional circumstances, the power and the responsibility in activating these rules and in complying with rules lies with the Commission.
Thank you very much, Johanna. Thank you, Binaries. I believe you have the survey of professional forecasters available, and I was wondering whether that was conducted after Brexit.
Okay, Euro Oscar Mike again.
An impact on the cost and inflation forecasts. And
106 on USD yen, 106.
time to assess the exact impact, but it seems to be generally that most observers expect it to be a question of when and how much you might act. So do you think that people who assume that running ahead a little bit, is there a fair chance that you've actually done enough?
Thank you. On the first point, I frankly can't remember whether the survey was done before or after. What I know is that on inflation outlook, the Brexit didn't seem to have any major impact at this point in time. Since we speak about inflation expectations, it's worthwhile pointing out that we have a kind of increasing divergence between the SPF expectations and the market-based expectations. The SPF expectations basically remain the same: 0.3 this year, 1.2 next year, 1.5 in 2018, and 1.8 is the expectation. So pretty accurate. On the other hand, we had the market-based inflation expectations, which in the days immediately after Brexit fell significantly. And one immediate explanation was that there are technical factors that cause such
Yeah, look at come right off the target. Amazing, isn't it?
impact on nominal bond yields was bigger than the
Thing is, will there be a follow-on? And that's a harder one to answer. Pay attention to this level. So I'm going to adjust here. I'm going to adjust the fib to the next fractal. And now you got to watch that fib level.
There is one last sentence that is in response to your answer, to your question. If warranted to achieve its objective, the governing council will act by using all instruments available within its mandate. So I want to stress readiness, willingness, ability to do so.
So he says he doesn't have enough information to make a decision.
So far, banks have suffered most from Brexit, it seems. They are very important for the transmission of monetary policy, so you see maybe there's some need to act. And my second question is concerning the at the moment the bond purchases are linked to the capital P. Would you outline to change that within the nearby future? Thank you.
I'll answer the first question. You're right, banks are important, especially important for the Eurozone, which is basically a bank-based economy, where the credit intermediation goes mostly through the bank lending channel. Bank equities in the aftermath of Brexit were especially hit, and especially in the Eurozone, and especially those banks with a high share of NPLs, of non-performing loans. Equity prices, bank equity prices are of some significance for policymakers, because if they drop in the way they did, one would assume that this is to stay, cost of capital would increase, and therefore the net return on lending would decrease and would suggest on the banking side a more conservative lending behavior. That's why we do care about equity banking prices for the transmission of our monetary policy. But let's consider this in kind of in a little more, let's say, right perspective, but also medium-term.
So notice that he can't make a decision today because they don't have enough information, which is kind of what I was saying about, nobody at this ECB is working there in July. There's no staff. The entire office is on vacation. Data dependent. No, they don't have data because nobody's working. Socialist pig dogs. Americans are embarrassed if they take their vacation. Right? Have you ever seen like two Americans talking about vacation? Here's how it goes. I have over 200 days of vacation saved. Oh yeah? Well, I got over 400 days of vacation saved.
reasons why banks are better, not much better than 2009. So, what is the problem?
Okay, Draghi is running out of enthusiasm here.
Profitability, not a problem of solvency. And as you know, next week, on July 29th, the EBA will publish the outcome of the most recent stress test.
You know, Peter, that's exactly what I'm thinking about. I got a pretty busy morning, but I got a cigar on mine.
Moreover, SSM has conducted the same stress test for an additional 56 banks under its direct supervision. And this stress test will be one input to determine the Pillar 2 supervisory.
I got one that's an 8 by 60.
So then what about the NPLs? We said that the NPLs is certainly a significant problem for the future profitability and for the capacity, the ability that the banks have.
No, it'd be. As Churchill is usually like 7 by 50. This is 8 by 60. It's like 50% more cigar than a Churchill.
And what one would say that the solution of the
Well, to be fair though, it's only 60 at the tip, and then it narrows and narrows and narrows and narrows and narrows.
second, the development of a full functioning NPL market, and third, government action in, first of all, passing that legislation that would foster the development of an NPL market. And
Yeah, most of the cigars I smoke are like 2 hours, 2-hour events, sometimes more.
bankers, corporate, personal bankers, legislation, other actions, and possibly
Yeah, often when I'm at my buddy's place, you know, I'll smoke one cigar and he'll have to smoke 2 cigars.
and so we want to avoid piracies. The second question, no, the answer is no, we had no discussion about that.
I'm just looking around the world. Very little reaction to Draghi except on the Euro USD, but that's accentuated by the bad Philly Fed news. So dollar a bit weak right at the same time, Euro a little bit strong, and so it's exaggerated there. But Euro Yen hasn't done much of anything. USD CAD has been a little yo-yo. You know, I called out USD Yen at 106. It's now 106.15. So you had your shot, son. Did anyone take scalp? The 501382?
The second question is on the QE program. Assuming you did face scarcities in bond markets, how difficult do you think it would be to change the parameters? Do you see any legal challenges? I know that there are more legal challenges with changing the capital key, for instance, than dropping deposit floor or taking another approach.
Why would you trade that on the news, Nuno? No. It was a 618. It was a 50% 618, which predicts a 1382, which it did. That was the first move. Yeah. Well, I'd almost call that a 50. You know, and it's a role reversal and stuff. But yeah, I know what you're saying. What you can do is keep moving the bottom of the pitchfork. Wait, that doesn't work at all. Hang on. Well, that's not working at all. It's fighting me here. Yeah, I was wondering why you would trade the CAD on a Euro event. Right, so you'd play the upper quadrant here. Right. All right, guys, it's 9 o'clock. I gotta prepare for New York. So I'll see you tomorrow. Or wait, tomorrow's Friday? Wow, is it really? Then I'll see you at FX Street tomorrow. Anyone going to be there for that? It is a premium member event, but it's like $1 a day. So maybe I'll see you there tomorrow. All right, here goes the next move, guys. So that's 2 moves, man. 2 moves I set you up. So you're welcome. Peace on earth. May the pips be with you. May our profits be above average. And I'll see you tomorrow, or I'll see you Monday. But I wish the best for you, so I hope you do well. Can't wait to hear your success stories. Cheers.